All right, everyone. We're going to be going through the Nasdaq ES Bitcoin Ethereum trades that I took a couple days ago. Fairly simple stuff. The whole reason why I decided to get into this trade was because we have a directional bias finally. Instead of whiplashing back and forth, actually have a direction that we're trading within. Although I did take the trade on ES compared to Nasdaq, that's actually taking liquidity and seeking it finally. The main reason why I decided to take the opportunities, which I'm going to show you guys, I'm already logged into the paper trading here. I'm going to take a second and explain why I took the trades that I did. So we've been falling down past couple days since Thursday, Friday. This whole time we've been dropping down lower and lower and lower. So at some point the market's going to want to give and take liquidity on the high end rather than just continuing to go down lower. So what I'm anticipating is price to make a bullish directional change. So in here, the market at 4 a.m. decides to start pushing up, pushing up. Although now, it took out the high just about, made relative equal highs. It's 6:30 a.m. So I'm still waiting for Nasdaq at 9:30 a.m. to go and do something. So in anticipation for 9:30 a.m. and at the open, fell back down lower, took out some liquidity, and I will go into what liquidity that was, but took out some liquidity and decided to push back up. And this is where my longs started to. This is whenever I started looking at my longs here and pushed up. And I started looking for shorts up in here, and I'll explain why I did. And I actually had two losers in a row, and the third trade was a winner. And we'll get into Bitcoin after I explain all this. So, what was the? Please don't worry about the music in the background. I don't live by myself here. So, if you guys don't know, I'm a traveling salesman, and there's some guys that play music here. Anyway, this is the draw on liquidity that I'm looking at. This new day opening gap. It's fairly large, sitting there waiting for us, and on top of that, it's the body immediately went up, and we never visited again until after this one, and we barely tapped into it at all. So this was the draw on liquidity for me. Now, in this environment, I'm expecting a draw on liquidity down here the entire time this is happening. The market just did not want to do it, and it wants to continuously compress, which isn't. It's not a problem that it wants to compress like that, but I finally had this gap get filled in, and I felt pretty good about it. Now, on the 5-minute time frame, the real reason why I even took this trade in the first place was you notice how we have the SMT here. Now, the SMT here is in an important location. So you see how this one's just about a higher high, relative equal high. This one's obviously a lower high, so that's important to me. This is my first short opportunity. And on top of that, it pushed up one more time on NASDAQ whenever on ES it made the OTE. So you can see from here to here made the OTE there, right? So it made the OTE, and then right after it made the OTE, it displaced down lower into an important area for take profits. So on top of that, the market did the same thing over and over again, the same system. So this is a lower high. This is a relative equal high, just about lower high, relative equal high. This took a long more liquidity, so I'm looking at a long NASDAQ. Long NASDAQ into the highs, and on top of that, we're looking for liquidity to be swept, which was up here. And you could even go inside of one of these 15-minute time frame fair value gaps, 5-minute time frame fair value gaps in there to clear that out. And the market pushed up, took out the high, took out the fair value gaps, and started to create SMTs over here in the run. So as you took out liquidity and got your TP taken out, you start to notice how there's an SMT development up here, and that immediately took my attention. This SMT took my attention up there as well. And also the market is getting compressed. Market's getting compressed. So in the compression, we're starting to see more SMTs show up, going lower, going higher. They finally agreed on the direction, and then it dropped significantly. And I was in this entire move on the way down lower, and I took profits around 96 flat. So I'm gonna go ahead and throw everything on there. I know it's a lot to look at, and as far as the executions go, we'll not look at the executions right now because I want you to be focused on. I want you guys to be focused on the actual trade setups rather than the executions. The executions are distractions. So this is the new day opening gap on May 5th, and that new day opening gap was the one that was on the daily time frame. Filled it in, immediately reversed. So from there, I mean, I'm completely expecting price to consolidate in this gap for at least 15, 20 minutes at least. It goes up to an hour, a couple hours sometimes, inside of an important gap that has not been filled in yet. So filled it in. I promise you it's going to revisit it and consolidate in there. So consolidating this gap, consolidating the top gap. But remember, there's SMT here. So the SMT is there, SMT is here. Excuse me. That's a higher high. This is also a higher high, but relative to these two highs, the overall market direction, overall market picture, excuse me, the overall market direction is going lower and weaker on S&P and stronger and higher on Nasdaq. So what that means for me is I'm looking for the market to be bearish on ES quicker than it is going to be on Nasdaq, and obviously that's what happened here. So really, what I'm looking for here is the market to start to drop, and in any way that I'm looking for the market to drop, that's exactly what I'm anticipating, which is when the execution orders start to come in, and I'm going to explain everything here on the 1 minute time frame with fair value gaps and all that. So I mentioned that I had two losing trades in a row before I took a winner. We'll get into the paper trading account details and everything, but yeah, the basics here is you start to have the SMT from these highs, this one here going lower, so it's going higher. Now in here in the 5 minute SMT, this one was going lower, this one was going higher, which is why I started to short here, because we made the 5 minute SMT, we went back into this new week opening gap up in here, and I want to see the market start to change sides, which it had a little bit of compression, which is why I decided to get in short here. So I respected it, created SMT again on the 5 minute time frame. I was like, all right, good to go. And then made the SMT over here, started shorting it on the way back down lower. And then I actually started to look at this fair value gap in there, which the market was respecting, very much so. But it was taking too long, and I started to see, like, yeah, the market is definitely going to take out my stop loss here. Took out my stop loss, and it started to go up higher without me, or it started to go up higher against me. So another SMT was developed. Look for another short opportunity, and I shorted it on the way going back down. Started to come back down. I wasn't around for this initial short up high, but I would have shorted like up here, like on the way back down, but I could only get on the retracement. So pushed up a little bit, shorted, and then market was, again, compressing. Took out my stop loss once again, and the market was, doing this whole, didn't want to go above 40 really, and the market was pushing up higher on Nasdaq. And I decided to take one last short before I threw in the towel for the week, because we had all this gap ready to get filled in, and we also had to compress in that new day opening gap that I was mentioning before, right? So over here, what I'm looking at in this area was market has been respecting this new day opening gap, and the 5 minute shows me that we're going to be going lower on ES and higher on Nasdaq. So we've been going up higher, going lower on ES, started to follow in the same direction. So I took a short here on the SMT, took a short there, took a short up here near the highs, and the market immediately started to fall back down lower. Took another short, and then I covered 10 at a pool liquidity in here. Pool liquidity before I even got taken out, because I'm a bit conservative in my take profits and stop losses. Take my first partial here, which is 50%, and my second partial was at 96, a couple of points away from the new day opening gap. Got just the very bottom by a tick, which is very impressive. By a tick, got it on the very bottom, and then pushed up, and then the market decided to go back down lower and finish however it decided to finish for the week. So again, as I mentioned, the market was getting compressed on ES. It was pushing up higher on Nasdaq. I understand there's a market directional issue or disagreement within here, so I decided to short ES and leave Nasdaq by itself, and then the market did what it did. I think the total on here was $9,000 in losses, or 8.9, 8.8, whatever. $9,000 losses on the two short trades, and the last trade was, I think, $28,000 to $29,000. So I came profitable around 19-20K. So not only that, but we can talk about the Bitcoin and Ethereum trade and why I took it. And so it's the same thing. The market was having a directional change, and I was in there early. And let me go ahead and log in here. But yeah, the whole idea behind this trade idea is that there was a pool of liquidity that was taken out prior. So we had, this relative equal high, higher high, and on top of that, Ethereum was pushing up higher, taking out liquidity. And Bitcoin is obviously weaker than Ethereum at this time, so I'm looking to trade Bitcoin. So market had a little bit of displacement, which is so funny. I had a limit order right up here. And the market was pushed up. I imagined that the market was going to want to fill this in before it dropped. Didn't want to do that, so I missed my entry there, unfortunately. And market started to drop back down lower, displacement, and then I filled in the gaps immediately. I was like, we're going to start dropping. So market started to come down a little bit. I shorted near the highs here. Shorted some more. Added some more. Added some more. Added some more. I covered 10 on accident, so you notice that I shorted 20 right here because I was gonna short 10, but I bought 10 on accident first. Because whenever on mobile, you like whenever you first open up your little graph thing, whenever you open up like the order entry thing, it's automatically on buy. All no matter what, it's automatically on buy. So I was quick with it, click buy on accident, and I shorted 20 more to compensate for the previous 10. Shorted a couple more, shorted some more on the retracement, and fell back down. And I got my first partial, which is at the very high end of this 5 minute fair value gap right in there. On the very high end, on the very low end was my fill for my full TP. And then short, buyback. And I think this was a total of $89,000. So usually it'd be around 15, 20K, but I kept adding in because the market was showing me that it wanted to consistently run in my favor. So I was eating it up. Now, although I guess they call it DCA or pyramiding is better for here because DCAing is whenever it's against you. Pyramiding is whenever it's in your favor. So while I'm pyramiding here into my orders, my what's it called? My take profit or my total profit, like I think quadrupled because of all the orders that I kept stacking on. Like I over doubled my order position and my order size and my take profit areas was a whole lot better because I'm able to take all the entries and pyramiding in my direction because I knew the market was going to go down and fill in those gaps, and the market consistently was putting in all those orders, and it was fantastic. So yeah, the market kept going in my favor. I was enjoying myself, so I allowed the market to continuously pay me. So yeah, as I mentioned, there's a lot of fair value gaps that I was looking forward to the market filling in here, and the majority of them are very bullish fair value gaps here. And the market respected 50% of this fair value gap. And on top of that, we have other fair value gaps on the 4 hour time frame and whatnot that are in here. Market was pushing up, doing its thing, and the market it was loving it. So I was taking it all, and it wanted to consistently pay me. So I was not saying no. And by the way, these are on the 4 hour, the yellow ones, and these are on the daily. So you even see some fair value gaps in here, another 4 hour fair value gap in there, and the market used a lot of support and resistance, and trading in between them, and it was very impressive to have these trades play out so well, and having my TPs in that direction, on my TPs in the area that there were was great. I guess professionalism by myself. So at the end of the day, I mean, this is very simple stuff, and anybody should be able to trade like this. I don't think it's very complicated. It just takes a lot of discipline and wherewithal and I guess emotional maturity in order to trade like this. And you see how we have these lows in here, and the market barely tapped into this fair value gap. So obviously, so there's some kind of support here, right? Quote unquote support. So right here, we're starting to see the market take some whatever you want to call it out, liquidity, change the market direction, and then we have a bit of a retracement, have support or whatever on the VWAP, and the market started to push up higher and go against, I guess, the initial idea, which doesn't matter. But yeah, we had that the pullback here. The market pushed up, closed above the VWAP, and closed above here, and then we had the retracement, and the market immediately pushed back in our favor. If you were to take the entry down here, and you would see even the displacement pushing up. That's whenever I'd enter right there. That'd be my entry, and then my take profit will be just before the first fair value gap right there, and I have a secondary or my full TP above this high right there, and it all get paid out within the same 15-minute candle. So all that would happen. I mean, it'd be fantastic, but at the same time, this isn't something that you want to be looking for all the time. I mean, if we're being realistic, you're not going to get it right all the time. But on top of that, it's not something that you want to be looking for all the time. So you want the market to come to you with these kind of opportunities. So, like I'll say this for example, whenever you're, market's coming down lower, and you take out this high and it closes above it, that doesn't necessarily mean that the market's ready to go and pay you, right? So you want to see the market consolidate, push up, give you a reason why you should get in, and then enter. So the market is very slow, typically on Asian session and London. So what I would personally do is I would wait for NASDAQ to show up in order to take a trade. Not all the time, because sometimes if we get some liquidity on London and Asia, and I'm seeing a good opportunity here in SMT or whatever 5 minute time, 5 minute time frame, 15-minute time frame in an important area, I'd absolutely go ahead and long, and then I'd ride the wave up higher or whatever. especially if you have liquidity is in here. Absolutely, I'd 100% get in there. But even whenever you would have opportunities like this, where you would see the market start to push up, push up, push up, this is not displacement. This is a candle that has a lot of liquidity in it, right? So whenever it pushes back down lower and respects 50% of this level, pushes back up, respects the fair value gap, I would not call this as a reason as why I should get in. You know, it goes up here and then makes another entry point and then goes back down lower. I understand it looks fantastic, but this is what I'm looking for. This is multiple candles in a row showing me that the market is actually looking to change direction. This is whenever I would enter. And you can even see how we had double SMT at the highs. Higher, lower, lower, higher. I'd short right there. Probably on Bitcoin, I'll be honest. So on Bitcoin, I short right here, and then I short there, and the market would immediately pay me, and I have my full TP down near these lows. Yet on top of that, I could short right here, but the market, you can hold this for a while. Put your TPs or put your stop loss near the high, your full TP would be in a higher time frame important area. So daily time frame, 4 hour time frame for value gap, you can have this liquidity pool as your full TP, mainly because the market is in an overall bearish idea, so you can have a leader run to the very bottom. Now, I am a very conservative style TP trader, so I would have my full TP probably around this wick, or maybe at the bottom of this wick, or 50% or whatever. I would have it in a very conservative area. That way, the market will always pay you 95% of the time. Will pay you before it starts to reverse or have any deep retracements. So in this particular example, this is why I exactly mentioned this. Such a good example of when the market has the opportunity to go and pay you and you don't take it. And then what happens is the market will come very close to hitting your full TP within $100, a couple $100, and the market immediately reverses and goes against you because it has more liquidity that it wants to take out, which is up here. So be very careful when it comes to your TP. Don't be too greedy and whatnot, and you'll find a whole bunch of success in the marketplace if you could just find it within you to be conservative. I promise it's going to pay you a whole lot better than if you were a lot more aggressive and look for TPs that are unrealistic. And on top of that, pay you consistently will always do you better than any amount of aggressive TPs. That's for damn sure. So in this particular example, we had another run where market was consolidating, pushed up higher, changed the direction of the trade, and then you look for an entry point whenever you would see necessary, and it would push in your favor. So those are the two trades that I took. NASDAQ, or the Bitcoin, was on the Thursday, and pushing into the Friday price action near the London and whatnot. But on ES, this was mainly focused just on the Friday price action. So these are the Thursday and Friday NASDAQ, ES, and Bitcoin, Ethereum trades. If you have any questions, you have my Discord phone number or whatever. My Discord is Jacob ARD period, all lowercase. Everything that comes up, let me know.